Welcome back. We are about an hour away from the opening bell for Wednesday. Take a look at markets. The melt-up resumes. Futures indicating a triple-digit gain at the start of trading for the Dow Industrials, up 117 right now. The S&P 500 higher by 15, and the Nasdaq right now up 62 points going into the Wednesday trading session. Warner Brothers rejected Paramount's hostile bid. The board called Paramount's bid inadequate. In a new letter to shareholders, raising concerns about the Ellison family's funding commitment. The board of Warner Brothers says the deal carries too much risk, and that the Netflix deal is better, and that its studios and HBO Max remain superior with stronger backing and more certainty. Warner Brothers has always wanted to do Netflix over Paramount. Warner has been engaging with all parties, however, it says, holding dozens of meetings and calls to assess offers and push for improvements. Paramount's offer is set to expire January 8th with the possibility of extensions. We are now waiting to see if Paramount raises the bid. That will be the next leg of this story. We'll see if that happens in the coming days. Join me now to get ahead of it is Navellier Associates founder and chief investment officer, Louis Navellier. Louis, great to see you.
It's great to be here.
Well, you have been spot on this market for years now. You've been investing in growth. That's paying off for you. Tech has been the leadership group. What do you make first before we get into the broader markets of this Warner Brothers story?
Oh, well, I'm rooting for Paramount. Larry Ellison's my neighbor, so.
That's the only reason that Larry.
Well, of course it's his son, but we like Larry.
Well, it's also a higher bid than you know in cash. You think they're going to raise the bid? What do you think?
I think they'll work something out, you know.
So you're not counting Paramount out just yet?
Oh, not at all.
Not at all. All right, what about the broader markets? I mean, Federal Reserve Chairman Jerome Powell just cut interest rates, but we're all expecting a lean into lower interest rates in the new year because President Trump's going to put in a new chairman. The president is interviewing Fed Governor Christopher Waller today. He's considering his choice to succeed Powell, and we know that the president has already interviewed Kevin Warsh and Kevin Hassett, both viewed as the leading contenders for the role. Do you think one impacts markets better than the other or more than the other, et cetera?
I think Kevin Hassett will be more interesting because he's just the happiest person on the planet. We've never had a happy Fed chairman. You know how they, you know, I think it would be good to have a cheerleader for America. Obviously, he's a cheerleader for America now, running the Council of Economic Advisors, but I think he'd be incredible.
Here's what Secretary Scott Bessent told me yesterday. He was sitting in your seat yesterday when we talked about the economy, and I asked him about Kevin Warsh versus Kevin Hassett. Watch this.
Kevin Hassett is an eminently qualified PhD economist with a great background. Kevin Warsh, and I've known both of them for 20 years, Maria. Kevin Warsh has a legal background, has been in financial markets. He's a former Fed governor. They both have experience at the Fed. Kevin Warsh as a governor, Kevin Hassett as an economist. They are both very, very qualified.
They are also entering the new year, which is expected to be strong. What is your assessment of the macro story? How do you want to be invested in 2026 , Louis?
Well, we're going to hit 5% GDP growth. Okay.
Are you serious? What?
Yeah. Well, we're running 3.5 to 3.8 now, but they're going to be revising it up because the trade numbers, the trade deficit's the lowest in 5 years. The exports the second highest ever recorded with low oil prices. So that's going to big upward revisions. Obviously, a lot of the growth was onshoring, but even and the data centers. But if you look at the data centers, their order backlogs are up 20% quarter over quarter. So we're going to enter the new year with we're going to hit 5% GDP growth, and it's not inflationary. There's deflationary forces all around the world. We import deflation from China. Real estate prices are still very soft. Rentals are down the last 4 months. We want to see what the owner's equivalent rent is in the CPI tomorrow. But I think we are getting close to deflation, and if every economist is trained to fight that, so we got to lower rates a lot.
I got to underline what you just said. You're expecting the GDP to show 5% growth.
Yeah.
That is a big deal, Louis. If we see 5% growth in 2026, you got to expect that markets react to that as well, right?
Oh, yeah. And what President Trump has to do, he has to cheer everybody up. He has to run around You know, in the State of the Union, he may offer $2,000 to low and middle income people from the tariffs. But they have a great economic team. Scott Bessent is phenomenal. I love Howard Lutnick. I know him personally. And Kevin Hastert's great. So, I mean, we just have 3 great cheerleaders for America. And it's just time to be happy and celebrate where we are now.
Do valuations concern you in any way? We're going into the new year, and you're talking about a stock like NVIDIA, close to $5 trillion in market value, Louis. Do you want to be associated and invested in the same names that took us here in 25?
Yes, because the data centers are still leading the growth. So NVIDIA is our largest holding by far. I love Jensen, by the way, the founder. They're still accelerating. Sales and earnings are still accelerating. And that was before they just got the China deal, you know, the H20 chips or H200 chips. The AI players, AppLovin and Palantir are great, but all the people building out the data centers, speeding things up. I mean, I just covered 45% of my portfolio.
Wow.
That's where all the growth is. Now, what happened in this last quarter, starting in late October, November, we had a big short covering rally, and a lot of stuff rallied that shouldn't have rallied. So what's happening now is the analysts are revising their estimates higher, and the leadership is reappearing. All those data center related things are great buys now.
Okay, so you want to be allocated toward tech going into the new year, and you're
Absolutely.
expecting a very strong macro story with 5% GDP growth.
Absolutely.
And you're not worried about inflation?
No, I think I'm more worried about deflation, because the whole world is shrinking except for America and India. America and India create households. Everybody else has stopped creating households. So when you lose households, it puts downward pressure on your economy unless you have incredible productivity gains.
Well, Louis, this is such a smart conversation. I could be doing it all day with you. We so appreciate your time this morning.
Thank you.
Thanks very much. Louis Navellier, Navellier Associates. We'll be right back.